USDT Masters course. You made it this far. So the previous lesson we covered the introduction. So today we'll be doing chapter 1. And we'll be focusing on the daily and weekly cycles. So today you will learn how to catch 2 to 500 to 1,000 pips using the time precision trading strategy. So before I delve deep inside chapter 1, I just wanna give you the recap on the previous session, just a quick recap. So if you remember properly what we learned on our introduction of first chapter is that time plays a crucial role when it comes to trading. And we saw it when we look at the candlesticks. If you realize that each and every candlestick is given a time period. So we have different time frames that represent different candlesticks, period of opening and closing. So that's already a hint that why we should be concerned that we should be learning about time when we trade, because each and every candlestick has a specific time to open and a specific time to close. We also saw the economic news, that even with the economic news, we saw that they happen every time at a specific time, and no matter what's happening, it's always going to be that time. We're going to see volatility at that time. We looked at the Asian sessions, that even with Asian sessions, they always happen at a specific time. It will never ever change, and it hasn't changed for centuries, for years and years. So it's always been like that. So we saw that the market, the candlesticks, they all are governed by time. We saw that time plays a crucial role in us making money. So if we don't learn about time, it's a very difficult thing to know how to make money in the forex or the trading market. So yes, that was the introduction that we covered on the previous lesson. So if you did not watch it and you just skipped and you came immediately here, please go back to that and learn about the basis, the introduction, how it came to be, knowing about. So know the details, so that you can have the heart and the understanding of how time precision trading came to be. So yes, let's start with chapter 1. So I'll just quickly be reading here. Let's start. So the financial markets are complex web vectors, indicators, and patterns. Among them, the Dow Jones Industrial Average, commonly referred as the to its ticker symbol. So I'm gonna skip. I'm just gonna skip. But what if the pattern, the cycle that could be harnessed is potentially greater profitability? There is where the 3-day trading cycle comes into play, a pattern discovered after delving deep into the intricacies of the USDT. So this, the USDT, the patterns that I'll be showing you. So this is something that we discovered that that's how the market moves. So we realize that the market is either consolidating, or it's buying, or it's selling. So that are the three movements. And then mostly the consolidation, it's where it creates a formation. Okay, looking at it at a bigger time frame. So you're gonna see it, we're gonna be using a big time frame, all those stuff. We're not gonna be using small time frames to catch those big moves. But if it's not buying, not selling, it's creating a formation. So I'm gonna teach you when exactly to know when to expect a formation forming. So when a formation is forming, as I say, it's mostly consolidation. So if it's not buying, no selling, it's creating a formation there. So that consolidation is just a representation that I'm gonna break out soon. And then if you look at it at a bigger time frame, we're gonna see, oh, it created a formation that created either an M or it created a W. So that's what we'll be using, especially at USDT. We'll only be using two formations, nothing less, nothing more. We'll only be using two. We're gonna using an M or a W or the head and shoulders. So just continuing to chapter 2, the inception of this theory stemmed from a seemingly simple observation, the number 3. So with USDT, guys, the number 3 plays a very, very crucial role. A very, very crucial role. So I saw that numbers, numerology, plays, you have to know it. So knowing numerology and having an understanding of how numbers work, you start to analyze that even the 3 at USDT is like a sign that gives you just an understanding of how USDT moves. Just the 3, as you know, it's known that 3 is one of the numbers that governs the universe. So in USDT, do you know that it's one of the best top 30 companies in the world? So we could say that those top 30 companies in the world rule the world. You understand? So that is why they use the number 3. 3 rules the world. Those top 30 companies are the ones that kind of rule the world. So just and then
if you only knew the magnificence of the 3, 6, and 9, then you would have a key to the universe. Tesla believed that the numbers 3, 6, and 9 held the secret to unlocking the mysteries of the cosmos. In his mind, they were a secret code that could be employed to discover the meaning of life and everything in the cosmos.
Peter, Paul, and Mary. 3 is a magic number. And that 3 stuff is not just something you like because it's poetic. It's something that's in the neuroscience of your brain. As people research and look into the brain science, they start to realize that 3 is interesting because it is the most basic pattern that there is. And our brains love patterns. Researchers at the University of Missouri have been looking into this. And a professor named Cowan is looking into this and saying, you know what's interesting about our brain is we build patterns. And patterns help us do what? They help us to avoid problems and they help us to solve problems. They help us to predict things, which is why we have computers, because we can take patterns and build out things. Amazing things happens when we get these patterns lined up. And 3 is the core, the simplest form of a pattern. And so we love those patterns. Our brains love those patterns. It's the way that they're put together. These researchers at the University of Missouri did research and they looked to see what is it that we could do with our brains. And guess what? At the end of the day, they realized that in our short-term memory, we can only remember 3 things, maybe 5 if you're really sharp. 3 is there in that magic number. Inside your brain, the physical makeup of your brain has 3 pieces, right? There's the cerebellum and the cerebrum and the brainstem. Or if you want to just use the terms I use, the front, the back, and the middle of your brain, and they do 3 different things.
So if with just that understanding, that is why I try to understand USDT in terms of 3s. Okay, let me use 1, 2, 3 and try to see if that's the pattern that's been following. And that's when I came to a conclusion, and I came to a conclusion that the 3-day cycle, at a weekly 3-week cycle, that's when I came to a conclusion. Okay, so that's how it moves. It moves 1, 2, 3 formation, big move. 1, 2, 3 formation, big move. 1, 2, 3 formation, big move. So you start to understand that, okay, 3 is really, really powerful when it comes to trading USDT. And coming to the third paragraph, after analyzing various data points, I noticed a recurring theme. So yes, obviously I went through multiple backtesting, and that's what we're gonna do today. We're gonna be backtesting, looking at how USDT moves, how it follows the 1, 2, 3. And I say sometimes it might not be as perfect, but I'm gonna show you that how to spot it, how to align with the market and move with it so nicely, so smooth. You're gonna see, you're gonna be amazed. So yes, it's after a long period of so let me just read a bit again. So the observation was further consolidated by the formation of certain technical patterns in the chart, notably the W. That's the formation and the head and shoulder pattern. So yeah, that's the W and the head and shoulders, and the M formation, M or W. So that's are the patterns that we'll be using in order for us to know when a big move is going to happen. And coming to the fourth paragraph, now to provide a deep understanding by 3 days cycle, I refer a period after which a September market move, approximately 500 pips, can be anticipated. So here I just showing you on this paragraph that just with this 3-day cycle, I'm telling you that you will be able to catch 500 pips. You'll be able to catch 500 pips. You'll be able to catch even 1,000 pips, 2,000 pips, 3,000 pips. So it's up to you. It's up to you how long you're willing to hold. But I'm gonna show you. You're gonna be so amazed. So just by this learning this, you're gonna be able to capitalize in the biggest moves. And then not only that, as I've told you with the previous topic, that you will know the exact day, date, and hour of when this market move is going to happen. And coming to, okay, I think it's the second last paragraph. The magic of the trade doesn't just stop at the daily charts. Okay, as I said, we're not only gonna look at the daily chart, we're also gonna look at the weekly chart. So just think about it, catching a move that's gonna be a weekly candlestick, catching at least 2 to 3 weekly candlestick. That's how much, that's close to 2,000 pips. That's the minimum. 1,000, let me say 1,000 pips, that's the minimum. But if so, continuing back there, if one were to zoom out and examine the broader landscape by checking the daily chart, the spanning weeks, other fascinating observation can be made. After counting the 3 weeks, a formation begins to take place. So every time after counting 3 weeks, you're gonna see a formation taking place, and after the formation is done, you're gonna know I'm gonna have to count another 3 weeks, and then you'll be able, as you can see, be able to catch a minimum of 1,000 pips. You'll see. And as the cycle dictates, upon the completion of another 3 weeks, a new formation again with a minimum potential of 1,000 pips emerges, as you can see. So coming to the last paragraph, the implications of this 3 days trading cycle are manifold for traders, especially those who trade based on technical patterns. This can provide an additional tool to their arsenal and anticipate significant market moves. So yeah, I'm gonna end it there. So I don't wanna take too much time. So as you can see, if you don't have the book, you can buy the book, you can get the book, and you can read along with it properly. So let's go to the charts. So let's go. And as you know, the book is only 150 USD. It's not that expensive compared to the courses. So if you get the book, you're good to go. But yeah, let's dive deep into the analysis. Let's open the charts. Yes, yeah, welcome again. So check the charts. So we're gonna be looking at formations on the 3-hour time frame. So we're gonna see the daily formations. That's what we're gonna be looking at. So first things first is to make sure that you're at USDT. That's the first thing. I'm at USDT. So you have to search for USDT. You saw where I came here. There's a search bar. You click it and you're gonna search for USDT. So you're just gonna come here, search for USDT, and I'm currently using this one, capital.com. You come there and you click capital.com, and then you click capital.com. So, and that's your chart. So if you wanna backtest with me, so as you can see, I'm backtesting based on May. So we're gonna start on May, go move with it. So, and then immediately after you're done on USDT, make sure your time frame is at 3 hours. So here's the time frame. So if you don't have 3 hours, you just come here, there's a arrow there, you click it and you come to 3 hours. And if you wanna make it visible there, you're just gonna click it, make it yellow. So you see, if I don't make it yellow, you're gonna just click it, make it a star there, add it to your favorites. See, it moves away if it doesn't have a star, but once I put a star, it comes inside there. So that's what you're gonna do, and then you're gonna click the 3 hours, and then this is your 3 hour time frame. So how do you start with this? So first things first is to recognize the formation. That's the first thing first. So this is a small formation that I see there. So as you can see, that's our small M formation. This is our small M formation. So how then do we find know when the next formation will form? So immediately after finding the first formation, you're gonna do what? You're gonna do what is known as the daily cycle. Gonna do the daily cycle, meaning we're gonna separate it based on days immediately after we break. So let me make an example below there. So if we have an information like that, we have an information like that we wait immediately to break here. Immediately once we break there, creating a BMS, meaning a break in market structure. Creating a BMS known as the break in market structure. Immediately once we do that, we break there. What we do, we're gonna start counting the next day. So maybe we're gonna start counting the next day. So that will be day 1, and then we'll count again. See, day 1, and then day 2, and then we count day 3. That's day 1, day 2, day 3. So this mostly continues to buys for extra days, and then on day 3 you're gonna see a formation forming again that's gonna give us sales. So as I said, that's how the market moves. The market moves with consolidation, and then it breaks out, consolidates, breaks out. So I'm gonna look at it live. So let's check it live. So coming back here, so first things first, what do? You spot your formation. So this is the formation that we spotted. This is our M formation, and then it gave us a break to the upside. We see that it broke there. That's our BMS. That's very important to note it down. We created our BMS there. We came to retest it, as you can see. So you can note it down that that's my BMS. That's my BMS. That's my BMS. So we broke it. We came to retest it right there. So that was the retest there. Then it continued up. So how do we start counting? So we start counting immediately from the next day. As you see, the next day started there. So that's my day 1. That's when I start counting. That's my day 1. Can I make it a bit bolder? It's light. It's very light. Even this color is boring. Let's make it white. Yeah. Okay, let's make it more bolder. Bah, yeah. So that's the start of day 1. Why do I say it's the start of day 1? Because it's a new day. As you can see, this is the 18th immediately. But this is the 17th, and immediately this candlestick is the 18th. So we start when a new day starts. So I know the time difference might be a bit different. Yes, that's very true. But as you can see, I'm using UTC plus 2. UTC plus 2 is Johannesburg, UTC plus 2. So my day ends immediately at 12 o'clock, and new day starts at 12 o'clock. So coming back again, so that's my day 1. I'm not trading, I'm still holding the trade, and then that's my end of day 1. As you can see, that's the end of day 1. This was a Thursday, this was the end of day 1, and then we come to day 2. And that's the start of day 2, which is a Friday, and that's the end of day 2, which is the start of Monday. And then we come to day 3. Day 3, that's when we start to open our eyes and we look for formations. So now we open our eyes here that we look for what? Formations. And already we see a formation already. So let me write it down. So this was my day 1. My day 1 was what? My day 1 was what's this? It's Thursday. So I'll write it on the bottom there. Thursday, that's my day 1. And then my day 2 was what? Was a Friday. Was a Friday. Day 3 was what? Was a Monday. My day 3 was a Monday. And then immediately on day 3, you open your eyes and you say, do I see a formation? Do I see a formation? That's what you do on day 3. And yes, we do see a formation. We see a head and shoulder formation. That's the head and shoulder there. And then just like that. Just like that. That's your head and shoulder formation. So your entry, that was my head, then my shoulder there, and then my entry was here on the 3rd day at the ray. At the 3 o'clock there. Now if you come this side and you check the time again, you'll see that it's also 3 o'clock. Yeah. So if you check the time there, it's 15 o'clock that created the left shoulder. The time was 3 o'clock. Very important to also note the time, but we're gonna delve in deeper into it on the next chapters. So that's 3 o'clock. If you check here, the retest there was also at 3 o'clock, and if you check the high there, you'll be surprised that it was also at 3 o'clock. So there was 3, then sold. So your sell was going to happen exactly there at the shoulder. That's where you wanna enter, exactly at the shoulder, and then you can risk, I don't know, I risk 30 to 40 pips on these trades, and then I go for 500 to 1,000 pips, because that's a formation. You hold it at least for 3 days. You hold it for 3 days. As you can see, this was okay, not 1,000, this was like 900, but we hold it for 3 days. So that's your entry there. I hope that was nice and easy, but that's example 1. Oh, it's example 2. Oh, this was example 2. So now let's do another example. So same thing again. You counted 1, 2, 3, your daily cycle. This is your formation. So immediately once we break market structure, we're gonna start counting. So as you can see, that was my BMS. I'll use a different color, I'll use a different color for my BMS. Let's use the red. Looks nice, but not that nice. So that's my BMS there. So we broke market structure. That's BMS. We broke market structure. So immediately after that, we're gonna start counting the next day. So we're gonna start counting here. That's my day 1. That's my day 1. So that's my day 1 here. As you can see, I'm gonna start there, and then I don't want to confuse you, so I'll use these lines again so that you can see the difference. And then that's my day 2. And then on day 3, what do you look for? Formation. As easy as that. On my day 3, that's when I look for my formation on day 3. So that's my day 1 there. That's my day 2 there. And that's my day 3 right there. On day 3, we look at for formation. So this happened on a Wednesday. So that's why it's my day 3, Wednesday. Yeah, spelling is not my best thing. So I'm a trader. I'm joking. I can spell, guys. I'm not that bad. Friday. That's when we look at formation. And then can you see the formation? Yes, we obviously can see the formation. It's another head and shoulders. Another head and shoulders. That gave us a nice, beautiful buy. Nice, beautiful buy there. So just like that, what do we do next? We can check the time. We can check the time. And check the time that created the left shoulder. We see 3 o'clock here, it created a left shoulder. We see 9 o'clock, that created a left shoulder. And we see 12 o'clock, that created the shoulder. But we see the head happened at 3 o'clock. The head happened at 3 o'clock. So it means the left shoulder, we're going to take the 3 o'clock one. We're going to take this one, 3 o'clock, because it happened at 3 here. And then we're also going to take the 3 there. As you can see, the time is below there. If you don't see, it's below here. So that's the 3. As you can see, 3 o'clock. So that's another 3. So it means we should enter trades on a Friday at what time? At 3 o'clock. Simple as that. So we come back there, 3. As you can see, that was our entry. There, it rejected there, 3 o'clock. So that was going to be your entry right there. That was going to be your entry right there. So we're going to enter exactly there when it comes for a retail. As I said, you risk at least 40 pips. You don't risk a lot. 40. And then go at least for 500 pips. That is a nice 500 pips there. It gave us a beautiful entry again. Okay, so immediately once you're done, you got your entry. What do? Start counting again. So let's count. So when do we count? Immediately once we break there. So we want to break there. What do we break? It's called a BMS. We remember this is called a break in market structure. BMS, break in market structure. So immediately once you see a break in market structure, you start counting. Obviously, you're going to start counting from the Monday because that's when the day ended. So this now is my day 1. It's going to end there. And then that's my day 2. It's going to end there. And that's my day 3. And I say that on day 3, what do? You open your eyes and you check, do I have a formation? That's what you do each and every day. That's what you do. So that's my daily cycle. That's the topic. So that's the daily cycle topic. So as you can see, this happened on a Monday. I can note it down, but I feel like I don't have to note it down, because now I think you understand what's happening here. So next example, I'm not gonna write this down, just gonna write down the days. This is Tuesday. That's a bad spelling there. Tuesday, and then that happened on the Wednesday. As you can see, it happened on the Wednesday. That's a beautiful Wednesday there. So on the 3rd day, what do? You look for formation. You open your eyes. You check. Am I ready for information? So we saw that on Monday it created this low here. Maybe you could have thought that we're gonna come back and retest it at 3 o'clock. That's what you thought. You said, I'm gonna come back. I'm gonna retest it at 3 o'clock. But we see that it didn't come there at 3 o'clock. Okay, it came, but okay, there it broke. Maybe you could have entered your buys there, risking a 40 pip because on day 3, I'm looking for information, but you saw it break, and then it created another low at 3 o'clock. So this didn't work. So what do? Meaning you continue it for the next day. So you saw that every time the formation was complete on the 3rd day, every time on the 3rd day and 3rd day, but this time it completed on the 4th day. So this was your formation. As you can see, the time there, it's 15 o'clock. The time is 15 o'clock. So what do you want? You wanted to come and retest there again at 15 o'clock. So it has another completion of the formation because the time zones, the time zones are the same. So 15 and 15, as you can see. So that was gonna be your entry right there when it comes to retest at the appropriate time, which was 15 o'clock, and the risk a nice 40 pips, and then you hold for at least a minimum of 3 days. So here you held for a minimum of 3 days, And as you can see, it got 1,000 beautiful pips. Easy, easy, easy. Yeah. Let me do one last example. Just one last example. I think you're getting it. Yeah, on a roll. So just like that. So immediately, what do? We start counting again. So where's our formation? As you can see, our formation is there. That's our formation. Whoops, gone. Understand? So what did it do? So it's very important to understand that we broke market structure there, and then that was just, it came back to retested. Yeah, that was the retest. So we start counting when? The next day. Very important to understand that we start counting the next day. So we broke which day? This was a Thursday or Friday. So we're gonna start counting on the Friday. Yeah. So that's my day one. And then that's my day two. This is my day two. Sorry, this is my day two. That's my day three. Right there. So we're gonna count. So as I said, I want to explain the days. This is day one. Understand that happened on a Friday. There's day two, Monday. Day three, Tuesday. So let me remove this, because now you understand what's happening. Now you have an understanding now. Okay, that's how it works. That's how it moves. That's USDT. So on day three, what do you look for? The formations. And I said we only use two formations. Only two. Head and shoulders, M or W. That's all. So we came here on day three. What do you look for? You look for formation. A formation. So we see that there it created okay, here it didn't create a low. So as you can see, it didn't create a low here. So okay, let me see what happened here. Oh yeah, created a low at 12 there, but we see the formation created a bounce there at 18 o'clock, created the left shoulder at 9 or 3. As you can see, created the left shoulder at 9 or 3. So meaning we wanted to come here and retest this line here, this line either at 9 here, because it's 9 and 9, 9 and 9, or to come and retest here at 3. So it's either gonna retest the left shoulder at 9 or it's gonna retest the right shoulder at 3. That's all. So we come to the 4th day. As you can see, this one again created a formation on the what? On the 4th day again, on the 4th day. So we count the 1, 2, 3, there was no formation, but the formation started to appear on the 4th day again. So as you can see, the time, it's 9. You see, 9 and 9. So as I said, each and every candlestick has a specific time allocated to it, and then it gives you the best time to know when to enter. Yeah, I'm trying to make it as small as possible, but it's refusing. So as you can see, it's a 9 and 9. That's a completion of your head and shoulders. 9 o'clock there, and 9 o'clock there. 9 and 9. So you're gonna put in your entry and you're gonna hold for a minimum of 3 days. Risk how much? At least risk a minimum of 40 pips. Risk a minimum of 40 pips, and then hold for the next coming 3 days, or at least a minimum of 500 pips. Yeah, just like that. And then as you can see, the next formation happened nicely. Next formation, as you can see, next formation, as you can see, next formation, as you can see. So continue to back test it, to go through it. So I'm gonna end there with the sessions. So I hope now you have a grasp understanding of how to have an understanding of how USDT moves. It moves with formation, big move, formation, big move. So you are always responsible to know when that book move lasted and how long it takes to make a formation. That's all, because that's how it moves. And then that's what I call it, the daily cycle. So on our next chapter, let me just open the book. Yes, here's the book. So these are the examples we picked up. Just explain the 3-hour time frame and then how the daily, all this, how they work. So it's a very simple thing. Just go through the book if you do have the book. So yeah, as I said, we only use 2 formations. You see that? A double top and a double top, or the head and shoulders. It's just there in order for you to catch these beautiful big moves. So in the book, I just explain it more even in detail, so that you will have an understanding. But if you watch the videos plus the book, wow, you're like on another level already of trading, of understanding the time precision trading. So on our next chapter, as you can see, we'll be now looking at the weekly, how to catch 1,000 pips continually, how to catch 1,000 pips, 1,000 pips, 1,000 pips. How can you do that? How can you do that? It's easy, very, very easy. So, but I'll show you on our next lesson. So again, if you want consultation, if you want to consult with me, just go again to the website and you're gonna see a tab there. So that's where you can send me an email, send me a message, and then we can do a consultation where we'll have a one-on-one session where I'll go deeper and so you can understand it. So some people I know will want some understanding. You might do something you didn't understand, or I'll just ask for a consultation. I'll make sure I'll speak to you one-on-one, and then I'll explain it to you. So yes, thank you for watching. Thank you for watching, and I can't wait to see you again on the next topic, on part 2. Yes, thank you for watching.